Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully you've all had a superb Saturday so far. Today we're going to be diving into our daily cryptocurrency market update, and this is going to be a really important update, guys, because we're really going to be looking at things from the perspective of how bad they can potentially get. And I really want to remind people that today is different from previous times of downward price action. You know, this is a different market to any other market that Bitcoin has faced thus far. And I'm going to be explaining that to you guys in this video to really help you understand that historic indicators of a bottoming price don't really apply to this kind of a macro landscape, because it's getting really bad out there. From the point of view that, you know, the economy is really on its arse. And not only that, you know, what we're going to do is we're going to look at Bitcoin from 2008 to really the end of 2021 and show you that it's been actually, you know, Bitcoin has been really born in very accommodating times in terms of markets all the way up to 2021. And I now believe that things have changed. And, you know, this is probably going to be the first real recession or acknowledged recession that Bitcoin has gone through, potentially leading into a depression, considering how long this may go on for. That being said, that sounds very doom and gloom. It is still 100% my belief that blockchain is a technological revolution that is going to impact our lives in the same way other revolutions that have came before it have, whether that be the fact that you guys are communicating with me right now on a PC, which was a revolution, the PC era, or over the internet, which was another revolution. You guys probably drive cars to work. You know, you had the motoring industry revolution, or you get trains, the railroad revolution, or the telephone revolution. Blockchain's very similar, and we continue to see blockchain as a technology get adopted despite the current price action. The price action really right now is driven, you know, we have institutions involved. So they're going to play by the macro game. They're going to take money off the table when they see turmoil ahead. And we saw that. We have previously said that the sell-off we got from 69K was very structured. The one that we had in May, which had quite a bit to do with China and a number of other things, was capitulation. This is exit. You know, people are exiting this market in fears of what's coming down the line. And you can see that in the bond market. You can see that across the board, because the period that we're moving into, I think, is going to be for many a very harsh one in terms of finance. You know, I talk to everyday people whenever I'm out. I love talking to people. And one kind of consensus that I'm getting from everybody is that things are getting really hard out there, whether that be they can't afford to get to work because of their petrol bills or their, you know, electricity bills. You know, people are really struggling, and people were really at the breadline before all of this inflation. They're now getting pushed into it, and they're also getting squeezed from a kind of consumer point, or from a credit point, given the fact that there's quite a lot of debt, quite a lot of private or public debt out there in the form of credit cards, mortgages, and they're getting squeezed from that angle. You know, it's not the environment for a flourishing bull market. So we're going to be looking at that. I'm going to be telling you why things are different. This is a quote here from David Rosenberg, talking about recession becoming clearer and clearer by the day. We're going to talk about this as well. This is a tweet from Anthony Pompliano saying that Bitcoin's price sits at the lower bound of its production cost for the first time since March 2020. Liquidity crisis as well. The idea here is that Bitcoin should, at minimum, be worth the cost of energy to produce it. So what we're going to look at here, you know, I want to get into the Bitcoin mining game. It's something that I've been considering for a long time. If we start to see miners capitulate and essentially stop mining Bitcoin, you know, that's going to mean for somebody like me that wants to get into the Bitcoin mining game, you're probably going to get quite a lot of cheap miners. And, you know, the kind of cost of things in terms of setting up a mining operation come down. The only thing that will stay consistent is electricity, but there are ways around that. And then we're going to talk about, you know, we've got lots of liquidations going on across the board. There was actually a tweet from Will Clement here saying, if you're a seller here, you're betting on this time being different. If it is or not because of macro conditions is up to you to decide. I'm going to argue that things are very different now from what they have previously been. You know, crypto will bottom and we will get another bull run, but there's pain that has to come before that. And if you guys have been following this channel, and this isn't about me being right or wrong, you guys would have known for 4 months plus, nearly 5 months, that we've been saying be exceptionally cautious here because, you know, everything going on. 2021, we got things wrong. We thought things were going to keep going because we were uber bullish, and I'm still uber bullish on crypto, but we didn't pay attention to the macro situation. It's personal now that I get this right, and that's why I've been diving into macro so much with you guys on this channel, and that is what we're going to do in this video. So let's start things off by taking a look at the overall cryptocurrency market. We can see things are down. You know, we're now under $1 trillion in terms of market cap, 838 billion. We were at 3 trillion. It's been brutal, and your altcoins are getting to sort of bear market lows in terms of percentages lost from all-time highs historically. But historically, and to kick things off, let's pull up our long-term regression band and our 200 weekly moving average. We did say you'd get down here well when you were up here. If you guys were following me, you could have got out at 41, 42K. I'm not saying that to brag. I take no. If you probably could have got up higher, got out higher. It's not about bragging. It's about ensuring that you guys, as the next generation of investors, many of you are, you know, new to the investment realm, are as well informed as possible. It's not about me being right or wrong. It's about me laying evidence on the table and you guys either agreeing with it or disagreeing with it. And of course, you know, adding it to your arsenal of information. That's what this channel is really about, education more than anything. Not financial advice, just giving you guys what I see moving forwards. We don't get things right all the time. Like I say, we got 2021 wrong. We nailed the bull market, but we got how the bull market ended wrong. I'm human, you know, it is what it is. And we're never too prideful to admit that. You know, nobody's going to get everything 100% right. But what we are going to do is give it our best effort moving forwards and really take into account all the factors at play here. So this time being different, why is this time different? Well, Bitcoin came around in 2008, ladies and gentlemen. I want to pull up the NASDAQ. We did a long video on the NASDAQ, by the way, and I got mocked for it because I was essentially calling for the potential that the NASDAQ comes back down towards your sort of March 2020 lows. I can see that happening. And what I want to highlight here is since 2008, when Bitcoin came around, generally, markets have continued to trend upwards. That, I believe, has came to an end. Certainly, given the kind of blow-off top fashion that we saw, it very much mirrors the dot-com boom. And today, you are only just undervalued or just overvalued in terms of GBP per stock, or tech stocks really, than you were at the dot-com peak. So there's still a long way to go in terms of valuations being met and a fair value being reached for the stock market, because it's extremely overvalued. Reason being is because where else have people been putting their money? You could literally have just put your money into the stock market and left it. You know, investing has never been so easy, and Bitcoin was born into that and has done very well off the back of it. I believe that has now changed. And I believe that given everything going on, there is real cause for concern to the downside for not just the stock market, but of course the cryptocurrency market moving forwards, given the environment that we are now in. And just because historically we've held the long-term regression band and the 200 weekly moving average, that doesn't mean that this time we're going to. You know, March 2020 was a real capitulation event. We've seen similar price movement, but without the buyback. And we haven't had a capitulation event like the world locking down to warrant this kind of a sell-off. This is more people going, right, there's real risk on the table. Crypto has a lot of leverage in the system. We're seeing the likes of 3 Hours Capital Back Protocol says major chunk of treasury is unaccountable for. These guys have been liquidated now, guys. The fact they're saying that treasury is unaccountable for, I mean, this is just a joke. You know, you really, when the tide goes out, you see who's been swimming in the sea naked. And this is what we're experiencing right now. One good way to look at the crypto space and what it's currently doing is it's really cleansing and purifying this market. You've got so many altcoins out there that are just absolute garbage that are probably going to disappear as a result of this. How crypto lending platform Celsius overheated. I've actually looked at a few interviews. I think I watched his interview with Peter Schiff. And I was on the side of Peter Schiff going against this guy talking, because Peter Schiff was saying, well, how do you get your, Bitcoin doesn't yield anything. And this guy was going, yeah, it does. And Peter Schiff was essentially saying, oh, well, it only yields something by you taking risk and lending it out. And he's like, well, it yields something. And he was talking about how gold yields something. Inherently, it doesn't. So one Bitcoin doesn't pay out dividends. You have to come up with ways, and we've seen those ways fail in regards to crypto lending currently, to make a yield off it. And he was kind of arguing that it does make a yield when it doesn't. So hindsight is always 2020. We've also got Babel Finance suspends withdrawals, citing unusual liquidity pressures. And there's lots of rumors right now about Coinbase and Binance. I can't see Coinbase and Binance going under. You've got to remember that they make their money from trading fees. They make their money from facilitating the buying and selling of crypto, not necessarily the price of it, but the price, of course, has a lot to do with the interest in the crypto space. So to recap on what I've just said, remember, markets were born in quantitative easing. We're now in quantitative tightening. Looking at the NASDAQ, it's just gone up since Bitcoin came about, and that's general for markets. And Bitcoin's really moved off the 4-year cycle theory, but there's been accommodation there throughout, really, in terms of, from an investment point of view. And this is what we're seeing change, I believe. And we've only just hit, and we've even looking at the 200 weekly moving average for the NASDAQ. In my opinion, we don't hold this. We may get a bounce off of it. Remember, markets can rally very hard in a downtrend. And historically, when you've entered a period of a recession, you've bounced off it before smashing through it. I think we go below it. And this is what I'm personally looking at in regards to what the future may hold for the NASDAQ. Doesn't have to happen if the Fed come in and start stimulating again. That will not be the case. But until they pivot, that's where the risk is for me, that we see further downwards price action given everything going on. And you've got to also, again, stress the importance of speaking to your everyday people and understanding that they're getting absolutely pinched and punched at multiple points. And that doesn't accommodate or support a runaway bull market, in my opinion, until the conditions change. And that's really what we're watching. We've gone over this in my Patreon. We've talked about the euro dollars. For anybody that's interested in joining my Patreon, it's well worth the value that you're going to be paying for it. It's a monthly thing. You guys can check it out. I do have a video on my channel called Welcome to my Patreon for anybody interested. That's enough of the self-promotion. David Rosenberg, recession becoming clearer by the day. Citi's economic surprise index just retreated to a new post the event low. Worst level since May 2020. I realize this comes as a surprise to all those who think that recessions are some kind of mythical part of the business cycle. That's the problem. Talking about what I've been talking about from the start of this video, Bitcoin was born in very non-recessionary conditions. We're now entering them. This is, of course, Anthony Pompliano talking about how it's now getting to the point where if Bitcoin continues to go lower, for a lot of miners, it's going to be very unprofitable for them to mine Bitcoin. That means they're going to shut off because nobody's going to mine Bitcoin at a loss. Maybe we step in and start a mining operation if this happens, and we can get miners for cheap enough and equipment for cheap enough. Because in bull markets, miners, of course, go up in price because everybody wants to mine Bitcoin. In bear markets, sometimes you can't give them away. It was something I was looking at in 2008, 2019, 2019, but never actually stepped in and buckled up. And I do know people who have connections to green energy suppliers in the form of like hydro energy and stuff like that. So maybe something we look into. But, I'll maybe let you guys know and do a video on setting that sort of stuff up. More liquidations to come. The reason I pulled this tweet up actually was, this is from Will Clemmen 18 hours ago. If you're a seller here, you're betting on this time being different. If it is or not because of the macro conditions, it is up to you to decide. So historically, again, talking about the long-term regression, talking about the moving averages, etc., talking about where we are, it suggests that on-chain metrics very much suggest that we're at a bottom for Bitcoin, and also various indicators in regards to EMAs and such. But this is not talking about what I mentioned at the start, and please pay attention. It's a different environment that we're currently in. And we're not popular for having a bearish outlook and saying prices are going lower. It's not about being popular. It's about making sure that you guys are as well informed as you possibly can be, and you understand the gravity of the situation moving forwards. It really is that important for me to emphasize this. So this video has gone on for 15 minutes. I'm sure some of you have fallen asleep already. If you've enjoyed the content, a like is always appreciated. So as a comment, go check out my Patreon. It's not for everybody, but certainly, you know, the community. I'm very happy with the community that we've built so far. Certainly a really nice way for me to interact with people. And that's really all I've got for you in this video, guys. Stay vigilant out there. I think things potentially are going to get worse before they get better. Been saying that for a long time now. If you look at Bitcoin, when was the last time we saw price action like this? Arguably never. Other than maybe you could compare it to 2013 when there was literally no liquidity in Bitcoin and those kind of price movements could occur. Now we've got a lot more liquidity. The problem is the liquidity that we do have wants to get out the market. All I've got for you in this video, guys. If you've enjoyed the content, a like is always appreciated. So is a comment, and I'll catch you all in the next one. Thanks a lot for watching, ladies and gents.